Rohr here with concise highlights early on November 19th, 2014. It's Wednesday and it's 7 a.m. We'll be concise today because much of the fixed income and the foreign exchange is exactly as reviewed in Monday's Global View. We'll be concentrating on the equities. So what does all this mean to the markets? As usual, we've got the hourly of the S&P 500 future on the left, 30-minute on the right. And the first thing we would note is that yesterday's somewhat more extensive push up, instead of the churn higher after the market deflated from the early 2043 high going back to last Thursday, it put the hourly MACD out above its upper runaway band once again. And, we're really not that surprised, maybe a little disappointed the market never got fully down to our 2025 to 2022 support at any point while it was consolidating. But now that it's out on the upside, we'd have to say you've got pretty good congestion support back into 2040 to just below it. Additionally, you have stalled temporarily at the topping line up into 2054, the new all-time lead contract high yesterday. But as we noted previous, 2055 is the oscillator resistance, but the topping line on the weekly chart is up here at 2065, which would be your real, hardcore resistance on any further extension of the rally. And that's very important right now because the oscillator resistance here at 2055 moves up $5 next week, as does the topping line, but also the market should get much better than that 130 points over the 41-week average. It starts to look like another $30 up. So you'd be talking into next week about something on the order of 2090 to 2095 before the market ended up into the fully extended resistance if it should push above the oscillator and the topping line. That pretty much does it for the short-term view of the S&P 500.